Surveillance. Now, you put out a report amongst with central banks, which basically sets out the core principles for national digital currencies. Now, that is as some central banks around the world are actually publicly saying they're still evaluating. Are you surprised by the pace of change at which we could see in this space?
Well, first, good morning, and thank you for having me. I was surprised. I've been surprised last year. Yeah, and all throughout the year. 2020 clearly has been the year where research and experimenting on CBDC has taken a leap forward. I'm not surprised anymore, but I've been surprised, and clearly the pandemic has to do about it. Clearly that has been a big push to contactless payments and digital payments generally.
This, of course, is the role of CBDC as a part of the payment system, as opposed to monetary tools. Do you see that possibly changing in the future?
No, I see central banks around the world addressing CBDC primarily as a payment instrument, and that's driven by change around us. Change in and by the way, the system is changing at both ends, right? At the back end, we're seeing blockchain infrastructures, and we're asking ourselves how to bring central bank money to these new infrastructures. And at the front end, we are seeing a lot of new customer-friendly applications and new ways to pay. And here also we have to wonder how we bring central bank money to that end of the market. But it's primarily a payment discussion. It's not primarily a monetary policy discussion. That may change in the future, but I don't see that today.
Benoit, Nouriel Roubini is going to join us here later on surveillance. He and many, many others really question the underpinnings of Bitcoin over to cyber currencies and what banking's trying to do. How can commercial banks affect this business without the taint of the crime and the scam associated with Bitcoin?
Well, there is room for everyone under the sun, so it's certainly not the central bank's intention to stifle innovation or to kill these markets. There is a lot of scope for innovation in the crypto space. What we want to do is to see it being safe for consumers. And that relates to anti-money laundering, combating the financing of terrorism, and so on and so forth. And so everything is possible. Innovation is welcome, but regulation has been very strong and tight. And that's what you've seen happening since over the last years everywhere. And we also want to see how commercial banks can help develop the ecosystem. Banks shouldn't be defensive. They have a lot to gain. This will create new services to customers, and they have to embrace innovation and to use all these new means of payment to provide new services.
I strongly take your point there, and it's wonderful to see the BIS leadership here. If you look at a chart of Bitcoin, the major question here is the underlying value of it, unlike gold and, frankly, unlike fiat currencies, whether it's the French franc or the U.S. dollar. Do you, as one of the leading monetary authorities in the world, have a confidence in the underlying pricing of Bitcoin?
So, Tom, there is no French franc anymore, right?
Well, that's an important point. There's a lot of people that say, Benoit, that we're going to see Bitcoin drift away when the underlying becomes expanded and the value goes down. How does BIS deal with this debate?
I would agree with that. I think Bitcoin might be a good investment opportunity. I have no view on that. I'm not providing investment advice. That's not my line of business. But it does not have the features of a currency, because you want to see currencies being stable, and stability has to be underpinned by policy, and policy has to be underpinned by politics. And that's why central bank money has been, and will remain at the heart of the system.
Benoit Coeure, is there a limit on how much digital cash people can actually hold to avoid damaging the banking sector?
So that's an important question. So certainly there are lots of opportunities coming with retail CBDC, or general purpose CBDC, as we call it. But there is potential substitution with bank deposits. Certainly, we don't want to undermine the banking system. We see value in our financial intermediation being done by banks. But there are solutions. You can put limits. You can hardwire smart contracts in the system. You can make sure that any digital currency will be distributed by commercial banks. Central bank doesn't have to be directly involved in that business. So there are lots of ways to make sure that commercial banks will not be harmed, and on the contrary, that they can leverage this innovation to generate new services.
So what would be the best way to track it and enforce it? Is it one wallet per person? Is it going through the banking system, or is it something else?
Look, the solution can be different in different places, right? And there is no one-size-fits-all CBDC. It can be different across countries. Just to state the obvious, preferences for privacy, customer attitudes to data protection, data ownership can be different across countries. And that can, in turn, lead to different architectures for CBDC. But what I'm saying here at a fairly general level is that we want commercial banks to stay as gatekeepers of that system. We don't want to push them out.